Hello and welcome to Moving Iron Podcast Market Rundown with Chip Nellinger. That's our Sunday edition, and not a whole lot happened this weekend, Chip, other than just President Trump and President Xi sit down and actually had a conversation for once, and I think they got something accomplished, but we don't know that for a fact yet. We haven't really got any estimates or numbers or what they're going to buy. We just know that's going to be a lot, so that's a vague term. So looks like the market's opened up pretty big here, man. So what's your take on all that stuff?
Yeah, I'm still catching my breath here. We're 42 minutes into the trade, right? This is probably, I'm going to say arguably the craziest, maybe most important Sunday night trade we've had since they started trading at night. So we had this meeting in Argentina. It went well. There were some agreements that we're going to at least not put into place this next round of tariffs that increase from 10 to 25%. So we're going to hold off on that. China has agreed to buy substantial amounts of U.S. agricultural, energy, and industrial products to help close the trade gap. But there's a 90-day period here where we're going to work out the rest of the details, right? So we've heard that before. Remember the very first time that we were talking about this, we had a tweet from President Trump about how China's going to take, more U.S. ag products than the U.S. farmer can produce. So the market is definitely responsive to this, right? It's a big step in the right direction. Both sides want a resolution on this, but there's a 90-day window here where we don't know what's going to happen. So we opened up quite strongly, 25 to 27 higher in beans. We opened up about 8 higher in corn. We faded back a little bit, right? Because there's a ton of corn, beans, and wheat that the U.S. farmer and Brazilian farmer, to some extent, in beans, is ready, willing, and able to sell on a rally. So this is very typical. You're going to see a tremendous amount of volatility here, I think, over the next 90 days, and particularly this coming week, more than we've seen in a long, long time, because the funds are caught short beans. They're going to be getting out of their beans, so they're going to be buying beans to run us up. Farmers are going to sell it. We're going to hit levels. The market's going to break back like we have today. We've had a 12, 14 cent rally or range in beans today, just in the first 40 some minutes of the night trade. So this thing's getting interesting now, but it's definitely a step in the right direction. Beans higher right now, about 17.5 higher. Corn's 4.5 higher. Wheat, we got wheat at about 6 higher, but that's about 7 off the lows. I'm sorry, 7 off the highs. So we're about 13 higher at the highs. So I guess buckle your seatbelts, because this thing's going to be a wild ride. We went from dead markets to a lot of volatility, and we've talked about this a lot, Casey. Every day we do this, have a plan, be ready for what the market's going to do, and this is a perfect example of it, right? We've had some chances. We've had orders in for people, 955 to 960. November 19 beans, 960 and a quarter has been the high. We're trading 952 right now. So you got to have the orders in, you got to have a plan and be ready to take advantage of this thing. And I'm not saying by any stretch that the high's in. I mean, this thing could keep going, but man, you thought we were crazy before on each tweet that came out. This thing's going into hypersonic mode, and it's going to get really crazy this next week and really the next 90 days until we get some sort of a final resolution on this thing. And we don't know, right? They said they're gonna buy a bunch more, substantial amount of U.S. ag products. We don't know what that means. We don't know quantities. We don't know what products. It's all a guess at this point. But it was immediate, at least the ag products. They said they were going to start buying it immediately. So I guess we'll just have to wait day by day, look at the USDA export sales reports and see what it is. It could be anything. It could be corn. It could be ethanol, beans, pork, beef. Sorghum. Could be everything. Cotton. We don't even know what they're going to take right now. So it's kind of a dynamic market we're in. Sunday night trade is a little bit of a shot in the dark right now, but hey, we'll take it. It's green across the board, and it's been a while since we've seen that, so we'll take what we can get, I guess.
Okay. Yeah, so it's been a pretty interesting week. So you've had everything happen this week from, the tensions between Ukraine and Russia got flared back up over Russia taking the ship out there in the sea out there and capturing whatever it was, 14 of them or whatever it was that they ended up taking. So that played an effect with the wheat market there early in the week. NAFTA actually, or what they're calling it now, NAFTA 2.0 got finalized, and everybody's back in love with each other, and we're all best friends again. And so now we get this China thing. So there's a lot of stuff happening in the market right now that is driving a lot of volatility, whether it be in the wheat market or just the corn and bean market, or even in the cattle market for that matter. So kind of expand on that a little bit and tell me what you've seen over the last week.
Yeah, well, there is a lot going on. You hit the nail on the head, right? We got this Russian-Ukraine thing. That very definitely has an explosive potential to affect the wheat market, because we don't know how that's going to pan out. I mean, that could become a bad deal really quickly over there, and potentially restrict grain flow out of the Black Sea area, particularly out of Ukraine. They have some key strategic ports on the Black Sea. That's Russia's biggest issue. That was one of the main strategic. You remember back when it was the Soviet Union, that was one of the biggest strategic points of control for the former Soviet Union, was the ports on the Black Sea area. But that's in Ukraine. Ukraine broke away. They're their own country now. Russia wants those. There's no question about it. I don't think they even hide the fact they want those ports. They're strategically extremely important, but also from a lot of different standpoints, right? From a naval standpoint, number one, but that's a huge area of grain exports, wheat and corn, from that area of the country, and or the world, I should say. So that is, if something were to flare up and those ports close, I mean, you'd see wheat explode 50 cents higher immediately. I'm not saying it's going to come to that, but you never know when you get Ukraine and Russia puffing their chests and, their fingers on the trigger here, things could get out of control. Beyond that, there's a lot of questions as to how much Russia and Ukraine even have left to export. They had, I think, smaller crops than a year ago because of drought situation. So we don't even know how much more they have to export. That's a wild card. So there's some things working in the wheat market here. The funds have a huge short position, not huge, but they're back short in wheat, a fairly sizable amount. So any little spark, you can see the funds exit their shorts. That create a lot of buying, and we can rally wheat. The funds are short a huge amount of beans with this China thing. That's not going to be a 1 or 2 day deal. It's going to take them 3, 4, 5 days to get out. This thing just changed with the snap of a finger, from extremely dead, lethargic markets with just no direction as of last Friday to now it's Sunday night, and we've got a whole different ball game. And it's just part of what we talk about. We've got to have a plan, because this thing, it could change back to dead, in 12, 24, 36 hours. So you just have to be ready for it, and there's no way to predict it. It's not just about how much do we raise and what's the weather. It's got this whole political issue, Russia, Ukraine, U.S., China. I mean, you could name off a dozen different, the Middle East. There was an OPEC meeting here. Russia said we're not going to cut production. So you've got crude oil. Now, crude oil is sharply higher because of the potential for China to take a bunch of U.S. Crude oil production. Maybe that's ethanol as well. We just don't know what this is. It's a moving target. So until we have a little more clarity, this thing's going to be just excessively volatile. Stock market, by the way, is taking it well, and roughly be about 400 higher right now if the stock market were open, based on where the futures are trading. Earlier today, after this news, when the market opened, some of the financial markets opened between 4 and 5 p.m. Central Time on Sunday evening. So at one point, we would have been about 500 higher in the stock market. So the financial markets are taking this China news really well for the time being. But, we're one tweet away from just giving all the gains back or doubling the gains. You just don't know. This thing is, it's a crazy, crazy deal, man. No one's ever seen anything like this. I've been doing this for, I don't know now, longer than what I care to admit, 26 years, I guess. And there haven't been many times in history you've seen crazier markets than this. Wars, 9/11, stuff like that. But this is right up there because it's just dynamic and an unknown.
Right. Okay, so let's talk about that a minute. So midweek, there's really the grain markets had a pretty decent run last half of the week. I mean, I'm sure a lot of that had to surround the NAFTA thing getting finalized, and there had to be some tensions there that were lifted. But I didn't really feel like. Did you really feel like that was a kind of might have been already built into the market? I mean, do you feel like that whole deal was kind of already baked into the numbers we were seeing?
Well, I think NAFTA was. I think what you saw at the end of the week was anybody that was short corn, beans, especially, and maybe even wheat to a certain extent, but corn and beans for sure. Anybody that was short, you had these meetings, and why take that risk? So I think you saw some of the short position holders buy back some of their contracts just to even up, and that causes a nice little bounce at the end of the week. And we're still seeing about, we're holding it together here. Beans are about 16.5, 17 higher, corn's 4 higher, wheat 6.5 higher. So we're holding these gains pretty nicely. And that's to be expected. A nice surge higher, gap higher. We talked about this earlier. You hit some selling pressure from farmers, you back it off, and then the funds come in and say, uh-oh, I was short, I bet wrong, I got to get out, I got to buy some more contracts. So if we can build on these gains, by the time we all wake up in the morning, 5:30, 6 Central, London, Europe comes on board here. There's a big surge of volume in our overnight markets between 4 and 5 a.m. Central time. And that's when some of these hedge funds managers come in and, start their morning in Europe and London in particular. So if we can hold these gains and build on them by the morning, that's going to feed on itself. And we could, I was telling somebody earlier, I don't know. When I go to bed here, I'm going to try and get a few hours of sleep, but when I wake up, it's not going to shock me if corn's up 30, and it won't be up 30 because that's higher than limit. If corn's up 20 and beans are up 45, 50, it wouldn't shock me. It also wouldn't shock me if there's some tweet out of China or Washington and corn's down 3 and beans are down 8. So I think you can expect anything at this point. But, point being, this thing's headed the right direction. We got a lot of good news here over the weekend. Hopefully they can build on it. Hopefully it doesn't fall apart or hit a road bump or a snag. And if we can get some quantities in here, if they can say, yes, here's what we're thinking. We're going to take X quantity of this product from the United States. That's going to give the market a lot more clarity. The market doesn't like uncertainty. If you can start zeroing in on what they're going to take and the quantities, that's going to help us immensely. And I don't know when that's coming. I don't know if that's this week. I don't know if that's 91 days from now when this thing is supposed to be finalized. But we'll see, I guess.
Okay, so let's talk about this. I was giving that some thought today. So if ethanol, okay, so China has that by 2025 deal that they're China 2025 initiative that they're pushing, where a lot of their fuels are going to come from a renewable fuels, whether that be ethanol or whatever that might be. And how much of effect? What's going to be the bigger driver in the corn market? Just the straight up sell of corn, or if there start to be a lot of refined ethanol that gets exported out, where's that balance at, and where does that start affecting the market more positively? I mean, which one's going to have a bigger effect on what happens?
Well, I would tell you that any amount of ethanol that China's going to take changes the corn market dramatically. Number one, here, not next week, but the week after, we're going to get to December. crop report. Now, they don't change any yields on December. They'll change any demand structure or world production. But the January crop report, we get the final yield numbers. And based on how the last part of harvest was and how rough it was and late and the crappy weather we had, it's not a stretch to think we could drop maybe another bushel to 2, maybe more, but let's call it, split the middle, call it a bushel and a half out of corn yields. That's going to tighten up the carry out that much more. If China's going to be in for either any of 3 things, sorghum, prior to the tariffs, they were a massive buyer of U.S. sorghum, okay? So if they're back in for U.S. sorghum and or U.S. corn, that's a game changer right there. That's, if it's U.S. sorghum, that's probably at least a dime added to the corn market. If it's corn that they're going to take in any quantity, it's probably 20 to 30 cents. If it's all 3, if they're going to take U.S. sorghum, some U.S. corn, and ethanol, that's an entire game changer. And we've talked about that several times on this podcast about everyone was hypersensitive about beans and pork, but no one was really talking about the fact that China was on record saying they want to like massively increase their ethanol production. They can't do it. The numbers they want to produce on ethanol, they can, in my mind, not physically do it with their domestic production. So if they're going to, this might have been in the back of their mind all along, we're going to narrow up the trade gap because we're going to buy a bunch of ethanol and or corn, sorghum from the United States. If that's part of it, man, this is a way different situation in corn. I mean, you could talk about, we're in the doldrums and talking about corn going to contract lows and just change the tone of that market with the snap of a finger. So it's a huge deal. It's not a stretch in my mind to think that at a minimum they could be talking about taking a big amount of U.S. ethanol just to help them bridge the gap as they build up their infrastructure over the next 5 years. And maybe that's corn, maybe that's ethanol too, but it's a game changer if they're going to do that. Right. We don't know yet is the problem. And that's part of why the market's probably going to be, you're not going to see some straight up moonshot here in $1 higher in beans and 60 cents higher in corn until you know more of the specifics about what's in China's mind as far as quantities and products.
Right. And that's what kind of has me scared a little bit, because this tweet, I mean, not really this tweet, but this news story that came out, very similar to the, we're going to sell more stuff to China than the U.S. farmer can produce, and how the market reacted to that. And it was very vague. That was a very vague news story, just like this is a very vague news story. They said, hey, we're going to ease tensions. We're not going to take any tariffs off anything, but we're just not going to add any for 90 days. And then, and by the way, they're going to take a bunch of whatever, XYZ. So that's my biggest fear is that, by the end of the week, something dramatic changes, and now we're back to where we were or worse, and how that plays out.
Yeah, and I think the market's taken a little bit of a reserved approach to it because of that. I agree with you. They've learned that a tweet is just a tweet, and it doesn't mean that it's reality. And so I think they're taking a nice measured reserve approach to it. And we should be higher. Right now, maybe you could argue maybe corn should only be 4.5 higher. Beans are 17, 18 higher. Maybe that's about all they should be, quite honestly, until we know more about this. So I'm glad to see that. I'm glad it's not 50 higher beans and 22 higher corn, because that makes for just a flash in the pan, quick spike. So hopefully the market can take a reserved approach and wait for some more definitive news on products and quantities. And then we can build on that and maybe have the makings and the start of a really nice rally. And but I'm going to tell you, we got a lot of beans domestically. We've got what looks like a record crop coming in Brazil. Now it's early on in the growing season, a lot can change, but right now there's people thinking you got a record crop coming in Brazil. You had a big crop of corn here, maybe not quite as big as what we thought 3 months ago. There's a big supply is my point. And this is good news and it's big news, but don't get all bulled up thinking beans are going to $12 and corn's going to $5. You still have to have a plan and react and sell the rally. And with big yields, you're talking north of $4 DC19 corn. You're north of $9.50 Nov 19 beans. You've got good levels on old crop, the 18 corn and beans. You're going to get at least 85 cents a bushel for a tariff payment. We're going to know more this coming week, whether we're going to get the second half of that bean payment. And there's some debate on that. I don't know whether you will or you won't. I would hope you do, because this hasn't changed. Just because beans are up 17 or 18 doesn't mean that we still haven't dropped $2.50+ out of beans. So I would hope they don't renege on that last half of the bean tariff payment. But my point is, with good yields and a nice bounce here, there's still some really good gross dollars per acre, gross revenue that you're seeing there, and we shouldn't shy away from rewarding this rally.
Yeah. All right, so let's bounce over and talk about livestock market and the hog market and how that's all shaping up. I mean, again, kind of a volatile week in the stock market has a big effect on what happens in the livestock complex. So, what do you see in there, and where do you see that headed?
Yeah, I'll start with cattle. We had a big break earlier in the week. The market recovered well. It's holding its own, right? And this is a seasonal time frame. This week, this past week, next week, the week after, where a lot of times see a downdraft. We can hold that together and not break much more. This market has probably some legs. Likely, there's no night markets for the livestock markets, so we're going to open that market tomorrow morning at 8:30. And with the unknown, especially pork, this is going to be good for hogs, just with the assumption that they're going to take U.S. pork products again. So hogs are probably going to open sharply higher. There hasn't been a lot of talk about U.S. beef to China, but that could be part of it. So I would assume that both hogs and cattle are going to take this news well and open sharply higher, or at least quite a bit higher in positive territory. From there, who knows? Hogs had a pretty volatile week. Couple big up days, couple big down days, and we've had big ranges in hogs. The issue there is we still have, the swine flu issue that doesn't seem to be going away, that's supporting us. And now with this news, the market, again, the top two products, soybeans, pork, the hog market likely is going to take this news very well in the morning. And my guess right now would be well into the triple digits higher on hogs based on this news out of China. But then from there, I don't know. Who knows? We need some specifics on how much and what products they're going to take.
Right on. All right, Chip, tons of stuff going on. Definitely need a plan. Stick to that plan that you have. Start thinking about what's going to happen in 19. If folks are working on a plan or have a plan they want you to review, what's the best way to do that?
Yeah, best way is just call our office, 309-550-7213. We just have a brief questionnaire we kind of go over, and we can help guide you with just a few questions on getting you thinking about what could you do a little bit differently. So feel free to give us a call. We're not high pressure at all. It's critically important, as markets are unlike any we've seen in modern history, if ever. And it's critically important because margins are thin. We got to dot the I's and cross the T's. So just give us a call, 309-550-7213. We'd love to chat with you.
All right, Chip. Well, good stuff as usual, and a ton of stuff to talk about. I'm sure this week will be no lack of things to talk about all the way through the week. So we'll talk to you again on Tuesday. Until then, have a good one.
Yeah, you bet. Tuesday's going to be interesting to see what happens. That's an important couple of days. So we're going to hold these gains and build on them. We're going to get a tweet and reverse it. So Tuesday's going to be interesting to build on what we talked about tonight.
Yeah, I just can't wait for the over-under to come out on on what tweet comes out that does what. So that's going to be.
There you go.
Check the line, folks. All right, Chip, we'll talk to you on Tuesday, buddy.
All right, man. Have a good week.
You too, man.
All right, see you.